Bitcoin stands at a pivotal crossroads, firmly holding the $64,000 threshold after weathering significant volatility sparked by escalating geopolitical concerns in the Middle East and fluctuating institutional flows. With the cryptocurrency market on edge, traders and investors alike are grappling with a critical uncertainty that could shape the trajectory of digital assets in the weeks and months ahead. Does this consolidation around a key psychological and technical level signal the calm before a massive bullish breakout capable of propelling prices toward prior highs and beyond, or is it the uneasy precursor to a sharp corrective crash that might test substantially lower supports and shake out leveraged positions across the ecosystem? Welcome to Crypto Hub, your trusted source for professional, fact-based coverage and analysis of the cryptocurrency markets and their intersection with traditional finance. In this update, we examine Bitcoin's current stance near $64,000 in granular detail, incorporating the latest price action, technical structure, on-chain indicators, derivatives data, exchange-traded product flows, and the broader macroeconomic and geopolitical backdrop. Our objective is to present a balanced assessment of the two primary scenarios implied by the title, drawing on observable market evidence rather than speculation, so that viewers can better understand the forces at play and the levels that matter most in the near term. Over the past several sessions, Bitcoin has demonstrated notable resilience, rebounding from an intraday low near $62,200 amid thin weekend liquidity and heightened tensions surrounding United States and Iran relations, including renewed concerns about the Strait of Hormuz and its potential impact on global energy supplies. As diplomatic talks advanced and some risk-off pressure eased, the leading cryptocurrency recovered above the 64,000 mark, briefly testing resistance in the 64,500 to 65,000 zone, while squeezing a reported $50 million in short positions. This price recovery occurred against a backdrop of falling oil prices that helped improve overall risk sentiment, yet the move higher has so far lacked the decisive volume and conviction typically associated with the start of a sustained trend. Market participants are now closely watching whether this hold can evolve into something more constructive or whether it represents a temporary pause before further downside testing. From a technical perspective, the daily chart shows Bitcoin consolidating beneath a broken rising trend line that previously guided the advance from lower levels earlier in the year. The $62,200 region has emerged as a short-term pivot of considerable importance. A sustained hold above it keeps the door open for a retest of the 65,000 to 67,000 area, while a decisive break lower could open the path toward the $60,000 psychological level and potentially the mid-50,000 zone where additional structural support may exist. On the upside, the 64,500 to 65,000 band represents immediate resistance, with a weekly moving average that has recently climbed above 62,000, providing a longer-term bullish reference point if price can stabilize and build momentum. Relative strength readings have moved into more neutral territory, following the recent oversold conditions, suggesting that while downside momentum has paused, fresh buying interest will be required to confirm any reversal. Volume during this consolidation phase has remained relatively subdued, a common characteristic of range-bound markets that often precede either a breakout or a breakdown once a catalyst arrives. On-chain metrics paint a mixed but informative picture that helps explain why $64,000 has proven sticky thus far. A substantial portion of the circulating supply, approximately 10 million coins, currently sits at an unrealized loss, reflecting the large cohort of investors who accumulated at higher prices during the prior advance. Realized losses have also elevated in recent weeks, indicating that some capitulation or profit-taking at lower levels has already occurred. At the same time, large wallet holders, commonly referred to as whales, continue to show signs of defending the $60,000 vicinity, with exchange reserves remaining relatively contained and suggesting that immediate selling pressure from long-term holders may be limited. These dynamics create a floor effect in the short term, as coins moving from weak hands to stronger ones during dips can reduce available supply for sale. However, the high percentage of supply underwater also implies that any renewed selling pressure could quickly translate into further downside if confidence erodes, particularly if leveraged positions are forced to unwind. The derivatives market adds another layer of complexity to the current standoff. Open interest remains elevated across major futures venues, and while recent short squeezes provided temporary relief, the overall leverage environment continues to amplify both upside and downside moves. Funding rates have oscillated around neutral to modestly positive territory during the rebound, indicating that long positions are not yet overwhelmingly dominant, but could quickly become crowded if price pushes higher. Liquidation cascades in either direction remain a live risk. History has shown that once a key level such as $62,200 gives way, stop-loss clusters and margin calls can accelerate moves well beyond what fundamentals alone might justify. Traders are therefore monitoring the basis between spot and futures closely, as any significant contango expansion or contraction could foreshadow the next directional commitment from institutional and speculative participants alike. Exchange-traded product flows have been a focal point of recent discussion and contribute meaningfully to the uncertainty around Bitcoin's near-term path. United States spot Bitcoin ETFs experienced notable net outflows totaling several $billion over a multi-week period, reflecting a combination of institutional rebalancing, retail redemption activity through brokerage platforms, and perhaps a broader rotation out of risk assets amid geopolitical headlines and questions about the pace of monetary policy easing. While these products have historically served as a powerful conduit for new capital during periods of strength, the recent withdrawal pattern signals that some participants are reducing exposure or waiting for clearer signals before redeploying. It is worth noting that outflows during consolidation phases are not uncommon and can sometimes coincide with local bottoms if underlying demand from long-term allocators remains intact. Nevertheless, a resumption of consistent inflows would provide powerful confirmation that institutional conviction is returning, potentially acting as the spark for the breakout scenario many observers are contemplating. The macroeconomic and geopolitical environment further complicates the outlook and underscores why Bitcoin is currently range-bound rather than trending decisively. Hawkish signals from central banks have kept liquidity expectations in check, while developments in the Middle East continue to influence global risk appetite through their effects on energy prices and safe haven flows. Falling oil prices have provided some relief to risk assets in recent sessions, yet any re-escalation of tensions could quickly reverse that dynamic and pressure correlated markets, including cryptocurrencies. Broader equity indices have shown similar consolidation characteristics, highlighting Bitcoin's evolving role as a risk-on asset rather than a consistent non-correlated hedge. In this setting, the cryptocurrency's ability to hold $64,000 reflects both its maturing market structure and the tug-of-war between long-term adoption narratives and short-term macro headwinds. Considering the bullish breakout case in greater depth, several structural factors could align to favor an eventual move higher if the current support holds and external conditions improve. A decisive daily or weekly close above $65,000 accompanied by expanding volume and positive derivatives sentiment would likely trigger algorithmic buying, short covering, and renewed retail participation, potentially accelerating toward the $70,000 region and beyond. In such a scenario, the post-halving supply dynamics that have supported previous cycle advances would begin to reassert themselves more visibly, as reduced new issuance combines with ongoing institutional accumulation through regulated vehicles. Geopolitical de-escalation would remove a key risk premium, while any signs of monetary policy easing or better-than-expected economic data could restore risk appetite across asset classes. Historical precedent from prior consolidation periods within bull markets demonstrates that once accumulation completes and a breakout occurs, subsequent rallies can be rapid and substantial as sidelined capital rushes back in. Corporate treasury adoption and continued global interest in Bitcoin as a treasury reserve asset would provide additional fundamental tailwinds, reinforcing the narrative that current levels represent a base-building exercise rather than a topping formation. Conversely, the bearish crash scenario warrants equal consideration given the observable stresses in the market. Should Bitcoin fail to maintain the $62,200 pivot and close decisively below it, a cascade of liquidations could ensue, pushing price toward the $60,000 mark and potentially testing the mid to low $50,000 zone where prior structural supports and psychological levels reside. Persistent or accelerating ETF outflows would compound the selling pressure by effectively removing a bid that has supported price during previous dips. elevated leverage across the ecosystem means that even moderate selling can produce outsized moves, particularly if long positions become overcrowded during any relief rallies. Macro deterioration, whether through stronger than expected inflation data, renewed central bank hawkishness, or further geopolitical shocks, could trigger a broader risk-off rotation that drags Bitcoin lower alongside equities. On-chain evidence of widespread unrealized losses also raises the possibility that additional capitulation from recent buyers could accelerate downside if sentiment turns decisively negative. While such a move would likely be viewed by long-term proponents as a deeper accumulation opportunity, the immediate effect on leveraged participants and short-term sentiment would be severe. Analysts and market observers remain divided on the probabilities attached to each path, reflecting the genuinely uncertain nature of the current setup. Some emphasize the constructive aspects of whale accumulation, contained exchange reserves, and the historical tendency for consolidations at these levels to resolve higher within the broader cycle. Others point to the combination of ETF outflows, geopolitical overhang, and the sheer distance Bitcoin has already traveled from its prior peak near $126,000 as reasons to expect further digestion or corrective pressure. The truth is that both outcomes remain plausible in the short term, and the market is likely to provide clearer signals only when price either reclaims $65,000 with conviction or loses $62,200 in a sustained fashion. Key levels to monitor in the sessions ahead include the daily and weekly closes relative to the 62,200 to 65,000 range, the trajectory of ETF flow data, any updates on Middle East diplomacy, upcoming economic releases that could influence rate expectations, and Bitcoin's dominance metric as an indicator of whether capital is rotating within the crypto complex or leaving it altogether. It is essential to underscore that cryptocurrency markets are inherently volatile, and that past performance offers no guarantee of future results. Position sizing, risk management, and a clear understanding of one's own risk tolerance remain paramount regardless of which scenario ultimately unfolds. This analysis is provided strictly for informational and educational purposes and does not constitute financial, investment, or trading advice. Viewers are strongly encouraged to conduct their own due diligence and consult with qualified professionals before making any decisions involving capital allocation. In summary, Bitcoin's hold at $64,000 encapsulates the tension between resilient underlying demand from long-term participants and the near-term pressures of leverage, outflows, and external uncertainties. Whether this proves to be the foundation for a substantial breakout or the early stage of a more pronounced correction will depend on how the market resolves the immediate technical tests and how the surrounding macro and geopolitical variables evolve. The coming days and weeks should bring greater clarity as volume returns and key levels are either defended or breached. That concludes our detailed examination of Bitcoin's position and the critical question of whether a massive breakout or a crypto crash lies ahead. For ongoing professional analysis, market updates, and in-depth coverage of the cryptocurrency space, continue following CryptoHub. Thank you for watching, and we look forward to bringing you the next update soon. Stay informed, manage risk prudently, and we will see you again here at CryptoHub.